Thank you so much, Arjun, for the introduction. Let me just quickly share my slides. And hello to everyone. I'm so glad to see so many people joining today. So my session for today is going to be short, but it's really going to be about ESG trends of 2023 and beyond. So what's kind of happening in the ESG world at this point in time. Arjun has already introduced me, but very quickly, my name is Shivani Rajpal. I'm the CEO of Earth Academy. We help companies with capacity building on sustainability, go deeper into climate and many other topics of sustainability and reporting. We also run company-wide sustainability transformational programs. So one of the programs that we are running is with a pharmaceutical company in the US, where we are working with their 14,000 employees and helping them understand sustainability from their point of view. So kind of building a program for them, talking about their language of sustainability, their SDGs, and how they can actually transform that or translate that back into the strategy of the organization. Before Earth Academy, I worked as a director of training services and software programs at GRI, Global Reporting Initiative. You all may know about GRI. It's the world's most popular voluntary sustainability reporting standards. And in my roles, I've helped organizations and governments in implementing the GRI standards. I've done some projects, particularly in the Middle East, where I've supported the government with the National Sustainability Reporting Standards development in the Kingdom of Saudi Arabia. I've provided GRI coaching for Aldaba Group of companies, and together with my team, I've trained all the listed and large companies in this Kingdom of Saudi Arabia on behalf of the Ministry of Commerce. So that's a little bit about myself. Please feel free to connect with me on LinkedIn, and I would be very happy to stay connected and see how this journey of ESG is actually taking place. Just very quickly, kind of jumping on to the topic of ESG, I just wanted to kind of bring your attention to some of the things that are hot off the press. Talking about Shell, you may have heard this, that Shell recently recorded double the amount of profit from as compared to the 2021 recorded profit. So they recorded 32.2 billion pounds in profit, while just paying 110 million pounds in windfall taxes. Now, what has happened is, of course, the shareholders may be very happy, but what has really happened is that it has raised concerns from the climate activists and raised calls for tougher windfall taxes after these record profits were actually released. So you can see that organizations, climate activists, stakeholders from different areas are actually coming back to the organization and asking them to take accountability of the issues that they are causing on the ESG factors. That's one example. And I just wanted to kind of bring another newest example of Adani Group, where they've actually incurred huge losses as a group after this report came out, where several issues were actually pointed out. Some of them were about improper use of tax havens and stock manipulation, and you can see that coming through. And several of these issues pointed directly towards lack of transparency in the governance, in their compliance. So really not looking through how the management team was constructed and not really looking at the compliance. Again, coming back to the ESG factors. So that brings me to the next slide, which is about the ESG disclosures by numbers. And just to kind of set the scene over here, ESG disclosure or ESG reporting is directly related to the management of the ESG topics. What you can't manage, what you can't report, what you can't measure is what you cannot manage. And therefore, ESG disclosures become quite important. So just a recent study that I wanted to bring your attention towards is from this GNA Institute in the US, where it said 92% of the S&P 500 companies published sustainability reports in 2022. And 70% of the Russell 1000 companies publish their reports as well. So we can see that the trends are really moving towards more and more companies actually reporting on their sustainability performance. And that's great. But let's just see, what are they actually using? What standards or frameworks are they actually using? So the first most popular standard is the GRI standards. You can see that the uptake of the GRI standards already from 2019. So this is just a 3-year trend, but GRI has been in existence for 25 years. So looking at the last 3 years trends, you can see that the uptake of the GRI standards was the most popular one from the 3 standards that you see over here, already at 47%, which raised to 54% in 2021. If you look at SASB and TCFD, you'll be amazed to see that SASB's uptake in the last 3 years has really immensely grown. From only 12% in 2019, it has raised to 67% in 2021. And TCFD from 4% in 2019 to 34% in 2021. And if you ask me, I would say TCFD's uptake is going to only grow from here. It's a very popular standard or framework that has now been integrated as part of the IFRS sustainability standards as well. And I'll come back to that. So just hold on to that information for a moment. Looking at the standards, we only talked about the 3 most popular ones that organizations are using, but there are other standards and frameworks that organizations are also using. So of course, GRI standards, we've already talked about it. Voluntary standards talk about all the ESG factors from an impact perspective. SASB sustainability reporting standards, again, all ESG topics, but talk about ESG topics from a financial materiality perspective, and I'll come back to that as well. IARC, that is the integrated reporting framework, which is more a framework related to principles and how to compile your financial and non-financial information together. TCFD, Task Force on Climate-related financial disclosures, is very specific framework for the climate-related disclosures that are financially material for the organization. But TCFD by itself, the 4 components of that, governance, strategy, risk management, and metrics and targets, are actually becoming very, very popular for other topics as well. CSRD, you may have heard of that. This is the new European standards. The name of the standards is ESRS, European Sustainability Reporting Standards, and CSRD is the regulation in Europe that is not just going to impact the European companies, but also companies globally. It is expected to impact 50,000 companies globally. Then ISSB, which is the board that sits under the IFRS's sustainability standards. And this board actually has integrated a few organizations, and just bear with me for the next slide to explain how the consolidation has actually happened. And then CDP has its own questionnaires, and SDGs, you will already know about it, has 17 goals that are universal, and there are 169 targets sitting under those goals. So these are all the different sustainability standards and frameworks. Talking about ISSB, which was kind of recently formed in July 2022, sits under the umbrella of IFRS, as I mentioned. It has integrated or consolidated a few organizations that were kind of with the same ambition. So looking at the topics, ESG topics, from a financial materiality perspective. So if you can see my cursor, integrated reporting framework and SASB already merged together as Value Reporting Foundation in June 2021. And then in July 2022, Value Reporting Foundation, which already consisted of these 2 organizations, as well as CDSB, which is the Climate Disclosure Sustainability Board that had TCFD underneath it, merged into ISSB. So essentially what is happening is the ISSB ISSB is putting together the sustainability reporting standards that are based on SASB, that are based on the principles of integrated reporting, and they're based on the core elements of TCFD as well. So that's what is happening in the world of financial materiality. Their general disclosure standard and their climate standard is already in the exposure draft format, and their other standards are in development. So looking at that, really there are three different types of categories, if you may, for different standards that are out there. One is the financially material standards, which is IFRS through this ISSB board that I just talked about. And the organizations who use these standards really talk to their investors because they're looking at ESG topics from the perspective of financial materiality. So it's very investor focused, it's focused on financial materiality of the organization, and it sits under the umbrella of IFRS. Then we have GRI, which is single materiality, but from an impact perspective. It's a multi-stakeholder focused standard, which means that when you use that standard for your ESG reporting, you're essentially talking to your multi-stakeholders who you are going to be connecting with to understand the impacts of your organization. So you may be talking to your employees, your community, government, suppliers, customers, etc., etc. Then comes the newest standard, which is under the umbrella of the EU, developed by EFRAG, which is the body that developed or entity that developed these standards. The standards are called European Sustainability Reporting Standards. The regulation, as I mentioned, is called CSRD. It's a multi-stakeholder focused. It's on double materiality, meaning it applies the financial materiality as well as impact materiality, and then talks to all the multi-stakeholders, including the investors and your shareholders, and it sits under the umbrella of the EU. So this is how the three different categories of the materiality or standards look like when it comes to different types of materiality. So looking at the trends of 2023, the focus is really on bringing sustainability information to the same level as the financial information. And more focus is being put on looking at your financial materiality as well as your impact materiality. So really looking at the information from double materiality, putting the information in a consolidated way together with your financial information or your management or director's report. And that is what is the biggest trend and movement that's coming in 2023 and beyond. Companies are being criticized for greenwashing. We've already seen that in the few examples that I explained to you. The relevance of the four pillars that I was talking about for TCFD are becoming more and more important. It's not just related to climate, because these four pillars of governance, strategy, risk management, and metrics and targets can be applied to any of these different ESG topics. And that is exactly what ISSB is doing in their standards. And that is what the Europeans have actually done in their standard as well, brought in the four elements of, or four pillars of TCFD, and asked the organizations to really report against them before they go into the deeper data points. There's a huge importance growing for risk management, so including risk management as part of the strategy of the organization while they're putting the sustainability at core. So that's more and more the case. And there are new regulations popping up, impacting companies globally. One of the best examples of this is really CSRD, the regulation that Europeans have, the European Commission has actually passed and is going to be impacting 50,000 organizations globally. So with that, I just wanted to quickly talk a little bit, very briefly about the financial materiality and the impact materiality and how that clubs together to form double materiality. We don't have much time, so I'm not going to go into the details. But if you really look at the slide over here and look at the left side of the slide, you will see that financial materiality is essentially collecting ESG information by the organization from the point of view of what is topics impacting them, the ESG topics that are impacting them, the company itself. Whereas if you look at the right side of the slide, it talks about the impacts that the company is actually causing on the people and on environment because of the ongoing activities, not just in their headquarters, but also through their business relationships. So looking at these two parts, you can imagine that the ESG factors can actually be quite different from the point of view of different stakeholders as well. Again, we can have a whole session, and actually I do a masterclass on materiality, but we don't have time for going into a lot of details at this point in time. So double materiality just kind of is clubbing those two together, where organization incorporates financial materiality as well as impact materiality in their analysis. Important to note that the processes are very different and the steps are very different for defining your financial materiality versus your impact materiality. Once that is done by the organization, then based on the results of that, the company should define threshold and prioritize which topics are actually quite important to be included in their report. And it's possible that there may be some topics that you may see, for example, emissions, GHG emissions that may be quite common between financial and impact materiality. That's absolutely possible. It could also be possible that you pick up some topics that weigh heavier on either the financial impact or the financial materiality or the impact materiality. Either way, the threshold that you define should be justifiable in front of the stakeholders. So when you apply that, it's important for the company to explain how have you incorporated both the perspectives in that. So that's where I would kind of end the concept, and a lot more to say about it, but I just want to pause over here and take questions, and then we move on with the program. So over to you, Arjun.